I get very concerned about the government trying to usurp digital currencies because they not only have an interest in being the monopoly player in currency, but also because these central bank digital currencies can become a method of tracking, of finding out what you're doing, where you're spending your money.
Absolutely.
That makes me very nervous, and I see what Gensler doing as a strong step.
Yeah, he's finally started to say the silent part out loud.
Over 70% of the crypto market is Bitcoin, Ether, Litecoin, Bitcoin Cash. Why did I name those four? They're not securities.
About one.
The public is anticipating a profit based on the...
I'm asking you a specific question, Chair Gensler. I said this in private. This should be no shock to you. I'm asking this question. Is Ether a commodity or a security?
And again, it depends on the facts and the law, and if there's a group of individuals...
I'm asking you about the facts and the law sitting in your seat and the judgment you are making.
And so, Mr. Chair, I think you would not want me to prejudge because I'm also...
But you have prejudged on this. You've taken 50 enforcement actions. We're finding out as we go, as you file suit, as people get Wells notices on what is a security in your view, in your agency's view. I'm asking you a very simple question about the second largest digital asset. What is your view?
And my view is if there's a group of individuals in the middle...
Got a strong core print today.
It was a good report.
This is a step in the right direction.
Overall, inflation continues to come down.
Inflation is coming down.
The Fed has to be pretty happy with these numbers.
And certainly it takes away some of the pressure for the Fed.
That should buy them more time to keep watching the data.
I would vote for wait and watch.
It doesn't look like they're going to need to hike this week.
The skip is priced in. That makes a lot of sense.
Definitely a skip that's already been communicated.
You can't say mission accomplished. The Fed still has to do more. And if you look at the Fed, we're looking at a situation where we haven't broken the economy, right? The job market's still incredibly strong. Inflation is stubbornly sticky, and they're talking about a pause. We really do think they need to do more. And more may be holding on, but more may be more interest rate hikes as we go forward in time. Things, if you told me that Fed funds were going to be above 5% and the economy would be doing what it's doing right now, I'm not sure I would have believed you.
And so for the Fed right now, even as much as they are continuing to do their inflation busting.
But really the inflation side, they're talking about 2%. And I think 2% is really aspirational. Can they get it down further? Yeah, I do think they can get it down further, maybe with time, but really I think they need to do more on the interest rate side. And I'm a little bit surprised that they're pausing at this point in time, because again, if you had the equity market up 10%, the economy where it is, the job market is strong, I wouldn't expect the Fed to be pausing. But you're right, they signal that. I should expect this pause. We should all expect that, and let's just watch the numbers and see what happens.
Yeah, they don't like surprising the market, as we know. I mean, and they're allowing sort of this percolation, right, of the rates to make their way. How do we predict what happens next?
It's a great question. So let me be incredibly transparent. We're at 4,200, so the market's above where we expected it to be. That was our year-end price target. We're very surprised we got here this quickly. And then when we look at the underlying fundamentals, they really don't justify this kind of sharp move up. A lot of it, as you know, is AI and AI related. A lot of it is positioning. And so as we look forward in time, we think it's a period where you should expect to see some sort of pullback. Nothing goes up in a straight line. And so at this point, a lot of my peers have gone from bearish to bullish. Sentiment has really risen. We're going to start looking at 2Q numbers in the second half, and things aren't great, so sooner or later we should have some sort of pull.
June 14th, 2018, then SEC Director of Corporation Finance William Hinman gave a high-profile speech where he declared that a token is not a security when it becomes, quote, sufficiently decentralized. But internal emails and documents show that senior SEC officials repeatedly warned Hinman that his speech wasn't true to the law and would greatly confuse the markets even more than they already were. Now, after more than 2 years and 7 court orders, we can finally share some of what we found in the Hinman speech documents. The SEC head of trading and markets warned Hinman that he was making up factors that, quote, go beyond the typical Howey analysis, as in not in the law, and that the speech could lead to not just confusion, but greater confusion on what is a security. Hinman ignored him.
If the network on which the token or coin is to function is sufficiently decentralized, and the purchasers no longer have a reasonable expectation that a person or a group is going to carry out essential managerial or entrepreneurial efforts, those assets might not represent an investment contract.
On June 4th, Hinman wrote that he didn't see a, quote, need to regulate Ether as a security, and set up a call with Ethereum's co-founder Vitalik Buterin later that week to, quote, confirm our understanding. On June 11th, the SEC's own general counsel advised against including any direct statement about Ether in the speech because it would be difficult for the SEC to, quote, take a different position on Ether in the future. The next day, Trading and Markets wrote that the statements about Ether were, quote, likely to create more confusion. But Hinman went ahead with the speech anyway. And the SEC, despite knowing all this, touted the speech repeatedly. The SEC chairman himself pointed market participants to the speech.
Bill Hinman recently outlined the approach we take to evaluate whether a digital asset is a security, and I encourage you to take a look at Bill's speech, which is available on our website.
The SEC knew the speech didn't follow the law. The SEC knew the speech would create greater confusion, and the SEC knew Hinman was making things up. So why is the Hinman speech still on the SEC's website? Why was it ever allowed to be given at all? And why has the SEC pushed a policy of regulation by enforcement, falsely insisting the rules are clear?